Welcome everybody. Merrill Chandler here at our new time. 3:45 Mountain Time. We are now, and a little bit of rebranding. We wanted to target it in and make sure you know what we're doing, and that it applies. So this is breaking news so that you don't break the bank. All right. What that means for us today is we're going to be talking about a little bit of housing, what the perception of climate change and housing, et cetera. And we're going to talk a little bit more about our kind of what's happening at the Fed and kind of, they're not calling it insider trading, but the policy, the presence of the Fed. Let's start out with that. The presidents of the Fed, right? And there are different Federal Reserve banks around the country, all responsible for producing money. And apparently, those printing presses are on 24/7 in all of the branches of the Federal Reserve Bank. It came to light last week that some are calling it a scandal, some are calling it just issues where we haven't had enough transparency. You pick your poison, which one you like or don't. But the bottom line is that that the Fed presidents have had in their portfolios, like in their meeting agendas, issues that they're addressing to all of the national banks, the top tier banks, and are making policy decisions, but at the same time have been trading on what might be considered inside information. And there's a big brouhaha that started last week and is kind of filtering down. There is a lot of perceived lack of transparency, and so they're working on new regulations that prohibit the presidents of the different federal banks or the Federal Reserve branches, making sure that they are not able to trade, or that there's certain guidelines for being able to trade. Now, just so you guys know, just like every other agency, the Federal Reserve technically is a separate entity, but it's governed and has a very close relationship, of course, with the United States government. And the presidents of the Fed, the chair of the Fed, and many times the presidents of all the different banks, there's a revolving door between the C-suite level executives of all the big banks and who the presidents are of the different banks. I mean, it's no different. This kind of collusion has been going on for decades. No different with the FDA, with a big pharma and the big pharma and the FDA, as well as the all of the big industries, big anything, big bank, big farming, big pharma, any of these, there's a kind of a revolving door between the industry experts and the government regulators, who are supposed to be on arm's length distance. So I'm not a political creature. I just know that what should be good for one should be good for all of us. So either give us all of the intel that you have in the decisions you're making, or you guys don't get access to those types of intel. So that one, you'll see that it'll last another couple of news cycles. But you guys, there's a lot that can be said about separating the policymakers from the positive results of having made those policies. So that's just me. Now, one of the things that I want to bring up is that there is, so I'm reading from an economic update that we got, and seems to be a lack of congruency between what's happening in real estate and where everybody's moving to, and the severe shortages, fires, hurricanes. So let's call it climate change. I again don't like getting into the political aspect of it, but let's say that there are more and more people moving to Phoenix, Austin, Palm Springs, Miami, and Salt Lake City, where a higher and higher and higher increment of problems, climate problems are occurring. Massive wildfires in Northern California, and Northern California continues to be a place where the city dwellers from the Bay Area are moving further out into the outer counties, and which are now subject to fires. Droughts in Southern California. Now, while lots of people are moving from, we always listen to and hear what's happening in California, that there's a lot of people leaving California, but there is not much of a net loss because many others are also moving to California. So, but they're moving to the locales where that are experiencing the highest degree of drought. Right, Salt Lake City, we're expanding in Salt Lake City rapidly, hugely, but as you push out into the foothills and into the other mountain areas, these are the areas that are actually catching fire, and so we're losing life and property as a result of moving further into what used to be, when I got here, was wilderness. And so the same thing is happening in Florida. A big move. There's lots of people who are attracted to the low cost living of, say, like New Orleans, or some of the wetlands area, which are hit repeatedly from torrential rains all the way to hurricanes, level 5 hurricanes. Same in Florida. So the thing that we need to be careful of, you guys, is while you're, and this kind of goes to that blue zone, right? The underwater writing that we talked about, is that more and more people especially real estate investors, are being attracted to areas because of the perceived lower price. But we as real estate investors are not doing the math that there's a reason why some of these areas have low prices, right? The cost to live there or the cost of real estate is less. And for some, not always, but for some areas, the cost is because it keeps getting the crap beat out of it by Mother Nature. So please, while you're there, I just came from the Los Angeles Real Estate Investment Association event, and it was a delightful event. I got to see people I haven't seen in 2 years because we haven't had a live event down there since COVID. And so while I'm talking to the other vendors and talking around, people are selling packaged, one-stop shop. Put in 50 grand, put in 100 grand, and you get returns on investments for different properties, right? It's the turnkey, what commonly known as turnkey. Well, the turnkey, it's turnkey because the cost of the properties are lower, but continue to be hit by when we look at actually the zip codes that these properties are being built in, they're being hit, if not every year, every other year, every third year, by devastating windstorms or Tornado Alley is another great example of locales that people are buying up low cost homes and investing in them in package deals, etc., syndications. And guys, just be wise about the natural disasters that are likely to occur there. So the thing that I want to wrap up with is that the home price growth is slowing down, but it doesn't mean that prices are falling. I haven't seen a single location or any of the intel where the actual price is reversing. The latest edition of the S&P CoreLogic CaseShiller Home Price Index that shows that home prices increased nationally almost 20% from a year ago in August. That's 20% increase in the price of homes over that time. But now over the course of this last quarter, there's been about a 2% slowdown in that to be somewhere around the 17 to 18%. So for those of you who don't monitor the CaseShiller Index, there may be an opportunity. Fundability, we want to capture the least expensive capital possible for, especially in our long-term investment. So whether that's a 30-year fixed mortgage or a 15-year fixed, et cetera. And so there is a slight drop in the rate of increase in these homes, and there are more and and it just keeps being wildly erratic out there in the markets. And then there is many call it a housing shortage, and many of the locations, as I discussed, in California, Florida for flood and hurricane reasons, the devastation of wildfires, floods, tornadoes, etc., are creating, because they are blue lining now. Insurance companies are blue lining, mortgage houses are blue lining, and drawing circles around areas that are commonly hit by these natural disasters. So much is happening out there that they're actually calling the climate is actually contributing to the housing crisis. So where you land on that, I don't know, but I'm telling you, it is fascinating to watch that we're already, because of the slow build process, construction loans are down. Not permits are up, but construction loans are down because there is so because even the supply chain and supplies and costs are continue to rise. And so you guys, it's awfully exciting. Wherever you are on this subject, it's thrilling. So that's it for our news update. And for those of you who are funding hackers, we're going to take our post show to the Funding Hacker a Q&A session. So let's reconvene from here. We're going to reconvene on Zoom, and we will kind of break down before we go into Q&A. Let's find out. Many of you are in California. Many of you are in these devastated areas by the natural disaster. We had a huge fire season and Hurricane Ira, I believe her name was. So let's talk about those things when I meet you back in just a moment. And if you're not a part, like, love, share, and if you're not a part of the Funding Hacker group, you guys, then all you need to do is go to getfundablebootcamp.com. It'll show you how to become part of our community and join us in these amazing conversations that we're having twice a week, Tuesdays and Thursdays at 4 p.m. Mountain. I will see you on the inside.